Hello everyone, it's Dale here. In this video I'd like to show you how to trade when the volatility dramatically changes. And that's what we are experiencing right now, right? The volatility has spiked quite a lot because of the tariffs and we need to adjust. If we don't, then we are probably going to lose a lot of money and we don't want that, right? Now, the reason for the increase in volatility is the tariffs, right? That's the big topic all across the board. But you know, it doesn't need to be the tariffs. The reason for change in volatility could be rate decision, it could be uncertainty, it could be some crisis, it could be anything. But important thing is that volatility changed and we need to adapt, right? So first thing that I'm going to show you is a volatility index. This is the chart of the volatility index. It is a daily chart, so each candle shows one day. And as you can see, the average was somewhere around, let's say, 15 to 20, right? That's the average volatility. Right now, there's this massive spike. So you can track the volatility through the VIX index right here, and this will show you how the volatility changes over time. But we don't need to look at this specific index. We can look, for example, on euro dollar. This is a daily chart, and what I uploaded up here, this indicator at the bottom, that's ATR indicator. And the way I set that indicator is just for 5-day period, so it adapts to changes quickly. Let me show you. If I go to indicators and to the ATR settings, then I set it for a 5-day period. And as you can see, let me scroll back a bit so you can see the bigger picture. As you can see, in the past, it was roughly around 70. This is like average daily volatility on the euro, right? 70, maybe 80 pips average daily volatility for a very long time. But now we are around 172 pips per day. That's the average volatility on the euro. Where I'm getting with this is that if you are trading the euro, let's say with take profit 10 pips, stop loss 10 pips, and you used a fixed take profit and stop loss like this, then yeah, in this period maybe it was quite fine. But what to do when the volatility changes dramatically like this? You can't really use this setting anymore because you would simply get stopped out too soon. Your take profit would be too small and your trading would just be terrible, right? So what to do? How to quickly adapt to changes in volatility like this. Now what I'm going to show you is a method which I've been practicing many years and it never let me down, so let me show you. Let me switch to an intraday chart and I'll demonstrate on 2 trades which I took earlier today. And the main message here is that you want to place your stop loss and take profit to logical places in the chart, not fixed take profit and stop loss like 10 pips or 15 pips or whatever. It needs to be at a logical place. So what I recommend is placing your stop loss behind support or resistance zone and your take profit before support or resistance zone. And the cool thing about this is that when the volatility changes, the support and resistance zones, they also get wider or tighter. So they adapt. The chart adapts, and this automatically adapts your stop loss and take profit according to the volatility, right? Let me show you on those examples, it will be way clearer. So this trade which I took on the US dollar Canadian dollar was a short right here, this line. This was a short, and because I placed my stop loss behind a barrier, I placed it behind this heavy volume zone, right? The heavy volume zone represents a barrier, always. Strong heavy volume zones always represent strong barriers, right? Or in other words, support and resistance zone. So the way I place my stop loss is behind this heavy volume barrier, also at the top of this swing point. That's what I also do. So ideally the stop loss goes behind heavy volume zone and at top of a little swing point like this. So the stop for this trade was right here, right? And the barrier, let me draw it, or in other words, the support or resistance zone, in this case resistance zone, was this whole zone, right? And the stop goes behind it. So this is the stop loss, which is behind the barrier. And the volume cluster here, that's the barrier. Now, take profit needs to go before strong support and resistance zone. In this case, there was a heavy volume zone, this one, standing in the way of my short, right? So I entered the short in here, like this, and then this heavy volume zone was standing in the way. It presented a potential support starting in here, but the whole support zone was obviously wider. It's always a zone, not just a one level. But this was the beginning of that support zone, and that's why I took the take profit right here. So as you can see, I followed this rule. Stop loss went behind resistance, and take profit went before support, right? And the cool thing is that the volatility doesn't really matter. As you can see, I never really cared how many pips this was. I can tell you now, it was roughly 25 pips, but I don't really care because the volatility increased, and also the barrier based on this volume cluster increased as well. So that's what determined that the stop loss would be here, right? Let me show you the other trade which I took earlier today. It was this one on the US dollar Swiss franc, and the trade was based on this strong rejection of higher prices and on this significant volume zone within the rejection, right? This red line which you see here, this dotted line, I'll just mark it in black, that was the place where I went short from. The stop loss, and again it was according to the volumes here, so I wanted to place the stop behind a significant volume zone and also at the top of the little swing point. The same approach as before, as with the previous example, right? So stop was in here, and again the volatility dictates where the stop loss goes. I don't really care how many pips this is, right? So the chart tells me where to place the stop loss behind this heavy volume zone, and take profit was before this heavy volume zone. I took the take profit right here. Looking at this retrospectively, it should have been somewhere in here, closer to the weekly VWAP, closer to this volume peak, but I was asleep at that time. When I hit the take profit, I wasn't able to manage the position actively, so when I sleep I just prefer to be safe than sorry, right? So that's why I took the take profit in here. Again, it would be better to take it here, but it was close. Anyways, it was before potential support. Yeah, the price did not react to that support. Sellers just dominated the market and went past the support. But still, this was a good place to quit the trade, right? And again, the market shows the place, not the pip count. I don't really care how many pips this is. I don't really care. What matters is that take profit was in a logical place based on this potential support. All right? So those are the trades which I took earlier today. Let me show you one more. This is a trade which hasn't played out yet. It's a trade that I plan to take. It's on the Australian dollar, US dollar. And the level that I want to trade is a support, this one at 62.95, based on this rejection of lower prices, a strong rejection where buyers aggressively took over. And if you use the volume profile like this to see how the volumes are distributed in that rejection, then you can see that there was this heavy volume zone right here, right? So again, I'm not really counting pips. I know that I want to place my stop below this heavy volume zone and behind this little swing point, so the stop will be in here, no matter how many pips this is, right? That's the cool thing about this strategy, that you don't need to adjust your fixed take profit and stop loss every time the volatility changes. You just look at the chart, set the stop loss and take profit according to the chart, and that's it, right? Now, this is the stop loss, and regarding the take profit, I simply don't know where it will be, because I'll want to place it based on how the volumes will look in this area where the price makes the pullback. So I need to see how the volumes are distributed in here, and I'll place my take profit according to that. At least it should be somewhere in here, but ideally bigger than risk-reward ratio 1. So I hope that this approach makes sense and that you like it. By the way, those levels which I'm showing you, those are levels from the members area. I'm publishing those levels every day. Let me show you real quick. So here is our back end. This is a table which I published yesterday. This is the level on the US dollar Swiss franc, which I was showing you. The level on the US dollar Canadian dollar was from yesterday's prediction. So that was this one. If you guys want to join us, then you go to my website, traderdale.com. This is it, and click this button, Trading Course and Tools. Currently I'm running a sale on my best educational and indicator packs, which are those. So you can take advantage of that and get it cheaper. It's the volume profile pack, order flow pack, view up pack and smart money pack. You can get them separately in here, or if you scroll down a bit, then you can get all those packs together for a discounted price. Alright, so that's about that. Thanks for watching the video. I hope you found it useful, and I'll be looking forward to seeing you next time, and until then, happy trading.